Hi, everyone. This is Jason Burak of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. He is CEO and Chief Investment Officer of U.S. Global Investors that has a large portfolio of mutual funds and exchange-traded funds, or ETFs. He's an award-winning investment analyst. He has the Frank Talk blog articles, which are very popular, and he's now the chairman of the board of Hive Blockchain Technologies. Frank Holmes, thank you for joining me again.
Great to be with you.
Now, Frank, I want to talk about the oil market. Really, over the last year, the oil market has gone up a lot since the summer of 2017. Why do you think the oil price has gone up so much?
Well, the big factor is PMI. I write about it every month. Comes out this number for PMI, like CPI is for inflation, PMI is for global growth. Purchasing Manufacturers Index is a forward-looking index that basically is great for projecting global growth 6 months out, whereas GDP is looking back what happened the past quarter or the past month. This is much more important for forward-looking. And so we had last summer, the global PMIs turned up and started to ramp up from low 50s to over 55. And that's always been a great precursor to say that we're going to have to consume more metal to manufacture airplanes. We need aluminum. We're going to need more copper. We're going to need more steel. And therefore, we're going to need more energy to manufacture high-quality products. And as orders come in to the manufacturers, it's a great concept, but it works for us, is that we can see that the price of oil starts to rally. Whenever the 1 month is above the 3 months for global PMI, the probability is 75% that 6 months out the price of oil will be higher.
So we're recording today on Thursday, May 10th, 2018, and the price of WTI crude is over $71 a barrel. The price of Brent crude is over $77 a barrel. Are we at a price now, Frank, where a lot of this marginal oil production, say the deep water offshore oil production that has not been economic for years, that's going to come back online now and be economic again?
No, I don't think you're going to have prices up there for a great period of time. But what you will do is you'll see the frackers. And I live in San Antonio, and I can tell the trains in the morning now, they're just filled with sand. And you can see them coming down with sand in the morning, and they're going back up with oil. And so they're going full throttle. So the build out in the Permian Basin, the Eagle Ford, which is just south of San Antonio, this is very profitable at $70 oil.
Yeah, I was going to bring up the Permian Basin. Pretty much all of the U.S.'s oil production growth has come from the Permian Basin, as the Bakken and the Eagle Ford have started to slow down their production growth. But do you expect then the U.S. to continue to grow its oil production and basically become the world's top oil producer?
Yes, I think that anything above 70 starts to really click it. And the other part that's really important is that offshore oil business always has difficulties in hurricane season, where the onshore doesn't have it. So it's a much steadier production. And there's much more global economic activity because you got to load the sand, pay people very well in Minnesota, in Michigan, Indiana, Pennsylvania, ship it on a train. Now it's another dollar being spent. Then it comes down to Texas. Then the sand is taken off the train. That's more work being done. And then it has to go through the injection process. And rather than drilling one big deep well, they drill hundreds and hundreds. So you have this huge multiplying effect of money. That $1 when you're doing, say, fracking is worth $12, and you're doing deep offshore, it might be worth $4 on the growth of money supply.
So the Saudis have said that they don't want $100 a barrel oil, that they're happy with $60, $65 a barrel oil because they're a low-cost producer. They can make money at that price. And if the oil price goes higher, that brings on the marginal oil production. That brings more investment into alternatives and biofuels and things like that. So are we almost at an oil price now, or if the oil price keeps going higher, where a lot more supply could come online and then the oil price could crash again? Or do you think that maybe the oil price is going to stick around in a trading range around these levels for a while going forward?
Well, we have three things working. We have the Iranian type of political crisis, and then you have the global PMI. Is it stable or is it going to roll over here? I think there are two important factors in that overall decision. And I think that, you're going to see that I think the global economy is going to stay steady. I think it's peaked, but it's going to remain steady, so oil can handle these prices. There's also some disruption between Canada and the U.S. and the movement of oil and the pipelines. So I think that these price of oil may all of a sudden ignite, that they have to start getting the oil, because Canadian oil is much cheaper, and so they have to try to get it transported. So I think that there will be benefits from capital spending for pipeline building.
That's a good point. Yeah, the Canadian oil sands sells for a large discount compared to a lot of other crude blends. Most people aren't aware that there's dozens of different types of crude. They see like an oil price, or they just see the price of a gallon of gasoline at the pump, and they don't realize that there's all these different types of oils that are different prices.
Correct, and who knows with this whole Iranian and China deal? Maybe someone can negotiate with Trump that China stops buying from Iran. They have to go buy somewhere else, and that would be a real sore to Iran. That's the best way to play with that whole scenario, because the biggest buyer is China. And you really have to, the third part, I give you the factor that's really important, this global PMI and oil demand. The correlation is the strongest with China, and China's demands have been just excessive. Russia's very happy. They're doing well because they're now pumping 600,000 barrels a day through that new pipeline they started building 5 years ago. That's in place. And so I think that this will sustain that sort of global economic respend. But I think coming back on the oil part is that some of the best deals are these MLPs that are not in the processing of energy, but just piping the energy, and the dividends have really got oversold on the lower tax rates. But the benefits of those types of products and those as an investment product, I think they're very attractive.
I was an oil and energy analyst as well a couple of years ago, and normally the market perception is that when the oil prices rise, that the refiners and some of the pipeline companies may have their margins squeezed. So the market probably overreacted to that. So I think you're right, there is bargains there in the overreaction.
Yeah. So that's and then I think maybe if we get something sustainable, we can get a real benefit from exploration. Junior energy companies, but that's still, I think, a way from us. But I remain, bullish, and I also think that the resources as a whole, the category, if you divide the resource stocks into the S&P 500, it's way oversold. The energy stocks, mining stocks, relative to the growth of the overall S&P 500. And we go back to 2006 and 2007, it was way above the average. So I think we've got an opportunity here for mean reversion. And I wrote about a piece on that. It happens to do with gold stocks, too, that they're just dirt cheap. And we have peak gold. We had peak oil back in the 2003, 2002, until the frackers came along, and innovation allowed for the U.S. to become the dominant supplier. New supplier on the block, and that was a big revolution. But there's nothing like that in mining. And the only person that can see through rock easily, he has problems with lead, and that's Superman. So the fact that there's no Superman seeing through the rock to find that gold, I think that gold is going to be of great interest. And I always like to tell people, since 2001, it's outperformed the S&P 500 2-to-1. The gold stocks have been still outperformed, but they've been really poor relative performance because they couldn't get their costs under control. But now it appears that they are, and I think what's happened is that many of these mid-cap junior gold producers just issued paper relentlessly, and so we came up with a smart beta gold equity ETF listed on New York a year ago called GOAU, Go Gold. And in our regressional study, we put 8,000 hours into this puppy, and what we found was that the destruction of 25% a year dilution by the GDXJ, the constituents that make up the GDXJ are issuing stock at a rate of 25% a year. So either the price of gold goes up 25%, or their production rises 25%, or it's just massive value destruction on a per share basis. So in our ETF we created, we just high grade it. And the royalty companies, they've been very good at showing revenue, book value increases per share, cash flow per share, dividends per share. Dividends are rising. Franco-Nevada is the biggest dividend-paying stock of all the gold stocks now. And then we just high-graded 25 companies which have the best factors on a per-share basis. And once they do some stupid M&A or a financing that's not immediately accretive, we kick it out every quarter. And going back over 10 years, that's outperformed the GDXJ 92% of the time in rolling 12-month periods. This past year, once we launched it, it's far outperformed the GDXJ. So it's done exactly what the model said it would do. And why? Because it's focused on value per share. And then you as an oil analyst, I'm sure you saw a lot of times when there was these dumb acquisitions that destroyed the value metrics per share.
Yes, or with ExxonMobil where they do share buybacks with debt and they didn't focus on replacing reserves adequately enough. So there's been a lot of financial engineering that's gone awry. I agree with you though. I do love the gold and silver royalty and streaming companies. I think the growth of that industry, the separate industry of royalty and streaming companies, it's gone from only a couple $2 billion about a decade ago up to around $32 billion. So it's an efficient industry. They can grow free cash flow, and instead of the banks now, they can actually do some of these financings to bring new gold and silver mines online in the future.
Absolutely, and their cost of capital is cheaper. When they do a financing, it's usually immediate cash flow, and it's accretive. So what's happened, what I've seen is, and I've written about this, and the Financial Times recently did an article that 70% of all stock trading today are quant funds. And the quant funds don't look at the normal NAV metrics. They look at book value, like they look at Amazon. And when these mining companies do these financings, it's always destroying their book value, or they have write-downs that destroys the book value, and the royalty companies haven't. So our GOAU is 30% the royalty companies, of the big cap ones. That is always 10% Franco, 10% Wheaton Precious, and 10% Royal Gold, and it rebalances each quarter. And then we'll pick up Sandstorm if it qualifies for our tough metrics of looking for cheapest cash flow return on invested capital metrics, and revenue per share growth.
Now, I have a question about the U.S. dollar and the gold price. So the U.S. dollar has had quite a bit of a rally the last couple weeks, especially against the larger currencies in the dollar index, but it's been rallying against emerging market currencies for about 6 months now. So do you think then with a stronger dollar, if this dollar rally does continue, that gold can still go up despite the headwinds of a stronger dollar?
Well, a lot has to do with the CPI numbers. And they said the CPI was modest today, and I just scratched my head because if you use the factors that measure inflation by just the Fed of New York, they're higher. And if you use the factors like look at airline tickets, they're up 300%. And they say, oh, they're softer today for this month. Well, it has nothing to do relative to what people spend. And more people are renting than buying, and the cost of renting has gone up much more than 3% a year. And the same thing with a lot of food costs. And so I'm just always bewildered by it. But if you use the 1990 factors, we have inflation running at 8%. If you use the 1980 factors, they're running over 10% inflation. And that's what I would believe, that inflation is being understated. It's showing up in asset inflation in the stock market and in real estate. But it has a cost to you if you want to go rent or you want to go buy something.
Yeah, I completely agree. They've been coming up with new ways, whether it's substitution, hedonics, geometric weighting, this new chained CPI. They're coming up with new and different ways to try to hide the inflation. So if the cost of something rises too much, they just take it out of the basket that they're measuring now. Absolutely.
So I think that gold's waking up to that, and that's what we saw. The recent numbers that central banks increased their exposures, 42% increase for central banks buying gold. And now they said that China and India slowed down, but they really didn't. The big slowdown, I think, when I look at the metrics, was the U.S. consumption of speculation because Trump was in power. But Trump is a master of having a weak dollar to drive up exports. You just take a look at Boeing, was the best performing stock of the Dow Jones, up almost 90%. Well, it just crushes Airbus when we have a weak U.S. dollar.
Yeah, I think Boeing, the stock price has tripled in the last couple of years, and it's not like this is a fast-growing business with huge revenue growth, huge earnings growth. That's not the case. I mean, I think a lot of it's because the market was sniffing out that Trump was going to win the election and that he was going to spend more money on the military spending as well. I think that's another reason, besides the weaker dollar, like you said.
Right. I agree. I agree with that.
Yeah. Last question on gold mining. So we've had basically a bear market, although we've had somewhat of a bounce in the gold price, bear market almost for 7 years now. Do you think a lot of the primary gold miners have cut all their costs to the bone? There's really no more costs that they can actually cut?
That's what I think. I think they're There's no doubt that, and they have to be very, very careful what they try to bring on stream. And I think on this whole thing on the socialism, the socialists are still in great power. You see, California basically took away property rights by forcing you to have solar panels, and you have to spend $10,000 with a 30-year payback. So that concept of another form of taxation on you by what they believe is deemed as the best to do is in full throttle. So I think that this is a good. It's good for overall for the gold market, and I think that you're going to see the gold stocks have to start buying some of these mid caps to get their production up. And you've seen this with Barrick. It's had to unwind so many of their great assets, and those other stocks that they sold, those new companies who bought those assets, have done spectacularly well because they had lean, mean management. And that's the Aussies bought the Barrick's assets there, and same with Newmont. They did a spectacular job of getting higher returns on invested capital. The Australian cash flow returns on invested capital just absolutely crushed the North Americans.
That's very interesting. So before we talk about the company that you're now chairman of the board of, Hive Blockchain Technologies, let's talk about the Bitcoin industry in general. So the Bitcoin price exploded in the last 18 months. It had another big crash. This is pretty normal to people who have been in cryptocurrencies for years now. Are you noticing that institutions are trying to figure out ways to get some type of exposure to Bitcoin or other cryptocurrencies now, like larger pools of capital?
Well, first of all, the big thing was the wake-up call of when I was launching GOAU. I was trying to launch an ETF in the coin space, and that's where I capture so much knowledge. And next week is Consensus, which is the biggest event in the year in New York City. And last year, Abigail Johnson, the CEO of Fidelity, spoke. And there's a lady that, with her CFA, never speaks at an investment conference, was speaking at a cryptocurrency conference. That was a big wake-up call for me. And she has, $2.5 trillion in under management, and they have the second largest discount brokerage firm in the world. So that to me was a big statement. And then when I was launching GOAU, New York Stock Exchange said they put money at 2015 into Coinbase, and USAA, just up the street from me here in San Antonio, they also put money into Coinbase when a round of $75 million. 6 months ago it was valued at $1.8 billion, and last week it was valued at $8 billion. It continues to grow even with this meltdown that took place in the cryptocurrencies. We've had three big waves down. And it all started in the second week of January with the announcement that the Senate was going to talk about and have meetings on cryptocurrencies, and then Congress was going to meet with the SEC. So the first wave was the Senate rallied, Congress sold off, then rallied again. Then there's all this taxes had to be paid for taxes, and so it sold off there. And now we've got this big rally, and we probably have one more test is when the G20 cartel of finance ministers come up with their pronouncements. They said in mid-July of the crypto world. And I think that's very sentiment-driven right now. Buffett doesn't like it, so it's sold off. Greenspan doesn't like it. And so I think I just have to push through that, because 10 years ago, Buffett didn't like Apple. And 5 years ago, he didn't own Apple. And all of a sudden now he loves Apple, and he always buys an industry after it's very mature and has attractive cash flows. He's not going to go into where there's a speculative new build-out taking place or hot new products like the iPad. He has to wait till it's well cemented into the system. But everyone moves around with that sentiment, and I think that that's what they're flawed. There's something big here, and what I discovered in that journey was there's no way the SEC or the OSC in Canada was going to let me have a ETF to own Bitcoin, because they were concerned about AML, anti-money laundering laws, and KYC, know your client. And so they could not afford a hacker getting paid in Bitcoin and showing up on the New York Stock Exchange, even though he's just not going to do it. So with that knowledge, I got a call from Frank Justra about the opportunity, and he said it was just young guys. And I have to tell you, you have to listen to young people. And it was my son and my godson that were urging me to learn the industry, and they redefined trust. And money and gold is all about trust. And one of the new things with the millennials is they believe in trust, and it's a different form. Like I didn't believe in Airbnb at the beginning, or Uber. I didn't trust that. And once I used it and opened it, and all of a sudden, you know what? I trust it better. The Uber, the cars are cleaner. I like Lyft. Same thing. And so this new element of trust, of trusting Bitcoin, as an asset class, that's been well accepted now from their early gold bug investors that never sold the gold to buy; they just diversified with it. And so I think there's something really positive that's happening in this crypto world, and redefining the element of trust in an asset. And Bitcoin has demonstrated, like the email says that you and I can share information. We can't share money over the internet, but the Bitcoin says that we can share money, and we can share value and economic value. And I think it's a big revolution for all the back office, for all the banks, the stock exchange. That's why the New York Stock Exchange invested in it, in Coinbase. That was growing at 100,000 customers a day. I had an account. It took us, my board 5 minutes to open an account at Coinbase. 5 minutes, and it takes you 3 to 5 days to open a new brokerage account. Millennials aren't going to wait that long, just like they have Tinder. They trust Tinder for picking up a date. It's fast. They want to trade 24/7. They just don't want to trade from 9:30 to 4 East Coast time. They want to trade anytime they feel like it. So I think that the market is going to move in that direction. But the regulators are going to jump over, which rightfully so, these crazy ICOs that allegedly selling that they're a currency when they're really another form of security, and they lack a lot of them full, true, plain, and timely disclosure. And that's what we have to have credibility with so many of these ICOs. So I think there's going to be a cleanup there. But I think the Ethereums and many of the other coins, they will evolve. Who wins down the road? I don't know, because I didn't think that. I thought Ask Jeeves would be a survival when it first came out in the 90s. It was the Google, and it's disappeared basically. And so I think that we're going to see new entrants, and we're going to see new developments. But it's very, very exciting.
A month ago, actually, George Soros, his hedge funds announced that they're going to start going into Bitcoin, Ethereum, some of the other major cryptocurrencies. They're going to start buying long positions there, which was somewhat surprising. But a lot of actually Wall Street players, their exposure to cryptocurrencies, rather than buying the individual currency with customer money, they've been getting exposure through Overstock. So I think George Soros owns like 10% of Overstock, which owns Medici Ventures and T0, which is an enormous initial coin offering. That's, I think, over $500 million. So let's talk about your company that you're now invested in. I just
want to tell you, that's so true. It's a very good observation. And what we've seen is for your listeners, is to know that the DNA of volatility, of bullion, gold, is the same as the S&P. It's a non-event to go plus or minus 1% in a day. And gold stocks is plus or minus 2%. But Bitcoin and Ethereum, the daily volatility is 6 and 7%. And over a 10-day period, it's between 18 and 21% volatility for Bitcoin and Ethereum. So the volatility is substantially greater. And what we have found is that Hive moves around with Ethereum. It has this great volatility. So these quant funds I mentioned earlier, 70% of all day trading, they're using Hive because it's so liquid as a proxy.
Yeah, it sounds like your company, High Blockchain Technology, is really onto something. Before we talk about your company more, there's a free in-depth research report for our listeners out there at pureblockchainwealth.com/block. I'll attach a link in the information section if they want to take a look at it. So you're one of the largest scale commercial Ethereum miners right now. You're planning on going into Bitcoin in the near future. What type of margins do you guys have mining cryptocurrency right now?
Well, to give you an idea, that we launched with the vision of going from $1 million a month and then we said after our second financing, we're going to $1 million a week. And by September, when we complete our build-out, we will have $2 million a week. We'll actually be doing $10 million based on coin prices today. A forecast would suggest a $10 million a month and making $5 million of free cash flow.
Wow.
So that's a pretty juicy profit margin. The creep, though, is the hash rates, and they keep rising at a rate of 1% a month. And so you have to make sure you've got cheap energy, which we have, and you have the latest of technology. We've had a lot of people knock on our door, want us to take a look at them. We find that a lot of people went out and bought ant miners and thought they were going to get into business, and they have no idea of the scale and the magnitude of building these data centers and all the systems that we have. And Genesis Mining is an incredible strategic partner. And they're the biggest in the world. They have 2 million customers. And they sold out of cloud space. They allow you to do pooling and use their servers in the cloud. And it, to me, their technology is like driving a Mercedes and a BMW and a Porsche all combined. They're so efficient in what they do. And when we visit other facilities, they're so antiquated, and they tell you about their stock and how it's going to great. But really, we're so fortunate, and so the investors in Hive, because we have the partnership with Genesis Mining, which owns about 25% of the company. And in that first quarter, which we launched, we raised $200 million, and institutions like Fidelity bought 10% of the company, and other institutions came in, another 15 in total, bought another 10% of the company. So we have 20% owned by institutions. We have myself owning over 6% of the company. You have Genesis Mining owning 25% of the company. It's got great, strong sponsorship.
Yeah, it sounds like a lot of institutional investors, strong hands. People are not going to day trade the stock necessarily. So that's always a good thing for, being long term and trying to build a company with long term growth. So you mentioned in the interview, or earlier in the interview a minute or so ago, about low energy costs. So how then can you lock in low energy costs, manage that risk? How is it different than compared to, say, gold mining, where the gold miners or other miners cannot control their energy and input costs as much?
Well, that was a big thing in northern Quebec, where it was so competitive because they had cheap energy. And same thing in Ontario and places like that. But a lot of places in Latin America and West Africa, it's a big component, especially if you have to use oil prices to pay for your energy. So there's no doubt, and there's a scramble. There's a real scramble right now to get these data centers with cheap electricity. And what we've done has been focused on stranded electricity or green energy, recyclable with hydro in northern Sweden. And then we just announced Norway. Norway is another 100 megawatts that could go to 200, immediate 30 megawatts. And we've already, we've gone from 2.5 megawatts to 24 megawatts in 6 months of energy consumption, and by September we'll be up to 45. We have the pathway, the highway to go to 200. Now, what's important is that there's lots of talk of the fork taking place with Ethereum, where you go to a proof of stake over proof of work, and I've been hearing that for over a year, but nothing's happened. And what happens if it does? Well, we've been bankrolling our coins, and you can put them up as a bank, basically, and get a yield on your pool. And what we're finding also now, that these GPU cards, which you use to mine Ethereum, you cannot use them to mine Bitcoin. You use them for Ethereum only. There's more complex graphics computer card. They're also great for animation. All the animation movies, they have to do rendering. They go to the cloud, and they need to have our servers. They need those cards. And the same thing with artificial intelligence. And over $1 billion a year is coming from Silicon Valley, is going into artificial intelligence. They're going to have to be using these types of graphic cards to process all that machine learning. And we're in a very sweet spot that we can, if it pivots one way, we can move with it.
So I've heard in other interviews, Frank, that you've compared this Hive Blockchain's business model and your ability to control your costs and grow out your free cash flow to the royalty and streaming model. So you really think that in a couple years you're going to have a blockchain mining company that's similar to a gold and silver royalty and streaming company?
Well, just think of that. That's a great question. We will have, say, 10 employees doing $120 million in revenue, so we're going to be doing $12 million in revenue per employee. Well, wow. That's Goldman Sachs is $1 million. Amazon is 700, 800,000. And the gold stocks are 600,000. Now, Franco-Nevada is 21 million now. But we have that scale, and if we scale it up to go to 100 megawatts, then we'll easily be doing 20 million in revenue per employee.
That's really impressive if you guys accomplish that. I saw a presentation by Royal Gold, and other than the royalty and streaming business model, which I think is the most efficient, there's like a handful of real estate investment trusts that get enormous amounts of revenue per employee with a small staff. So I wish you guys the best. I think you guys are going to make a lot of money if you accomplish that.
Yeah, and your cost of capital is cheaper. When you do a financing, it's always accretive. Every transaction we did last year was accretive to investors, unlike the gold stocks, which was dilutive.
So one of the criticisms of Bitcoin, cryptocurrency, and mining in general with proof of work is that Bitcoin uses a lot of energy. So do you think this is true? And do you guys have the right business plan in place to hedge this risk in case like governments and environmentalists and regulators start really, I don't know, threatening the Bitcoin mining and Ethereum mining industry?
I think it's been so exaggerated. It's been just greatly exaggerated. I think the whole industry spends less than Morgan Stanley spends on technology. It really is. If you just take a look at how many coins you process a day and how many billions of dollars a year, it's de minimis in that scheme. But it has been greatly exaggerated from what we've been able to see. But fortunately, what Genesis Mining started was always stranded electricity. And the only real bad guys in this whole space have been the Chinese. And they're using coal energy because they get some type of a sweetheart deal with the local government, and that's toxic in the sky. But they don't care, and that's that country's policies. They say one thing about anti-Bitcoin, and they've not slowed down in any of their mining. And the richest guy in the whole space continues to mine in China. So I think that. That's the real argument for us. We've been predominantly focused on these inexpensive areas where you're paying less than a nickel per kilowatt hour.
So it just sounds like the normal government hypocrisy there, where the governments are going after a certain industry because, you know, there's kind of the stereotype, at least early on for years ago when Bitcoin first came out, that only, you know, criminals and drug dealers used it. Now it's going mainstream. Hopefully that perception will change about Bitcoin and cryptocurrencies going forward. But in terms of near-term catalyst, Frank, for high blockchain technology in the next 12 to 18 months, so you guys are going to start mining Bitcoin in the near future. You're ramping up your mining capacity. You're diversifying your data centers. What other news stories are coming, do you think would be important for listeners out there to follow?
Well, we make the announcement for the funding for the build-out in Norway. I think that'll be another sweetheart deal to come along. But right now, we just want to stay steady. We want to deliver what we said we'd deliver by September. And I think that as each month goes by, we're just going to get a re-rating. That's what's going to happen. And we've maintained our costs. We've been frugal as possible, except for we spend money like we're creating a brand. And when you go launch a product, you spend 5 to 10% of your revenue on marketing. We won't even spend close to that. And basically positioning themselves that this is the best infrastructure play out that's on planet Earth. We found I was told in Canada that on the success of Hive, 50 blockchain deals were done, 50. And a lot of them we've seen, et cetera, they're just not, they're like driving an old clunker. So I don't think they'll survive. And a couple have reached out to us, will we buy them? And we say no because they just don't have the goods that's necessary. It almost like it's better for us to just start from scratch, what we're doing in Norway, than buying someone else's hype.
So we're at a little over 9,000 Bitcoin price right now, and $743 per coin Ether coin. Is the industry's mining costs, so your mining costs or the industry in general's mining costs, is the industry making money mining the coins now, or will there potentially be a scenario where temporarily the price of those two coins would drop below the cost of mining?
Well, here's to give you some data points. There's been total of Bitcoin, 17 million coins have been mined to date. Leaves 4 more million coins out of 21 million that's going to be done. It's capped at 21 with block rewards having every 4 years. So every 210,000 blocks are done. So right now we're going to see another drop in that block rate in 2000 after going into 2019. 2020. That block will go. Right now you're getting 12.5. It's going to fall to 6.25. So we were talking. There was a great conference this morning on capital costs in the mining industry, and basically the cost right now is about $6,000 cash costs. All-in costs for the new chips is over 6,500. The old chips is probably like 7,000. So they're still profitable. And they're making 50% margins.
And what about Ethereum then? The cost, the average industry cost, and what your margins are for Ethereum, since you're mining that now and you're transitioning to adding Bitcoin?
What we've seen is that the rates exploded here on the overall cost. But for us, we still enjoy, we haven't really published it, so it's so difficult for me to say something that's not in the public domain.
Oh.
I can tell you what the report was. That was for the global industry, but giving you specifics on Hive is just that I shared with you earlier that based on coin prices today, if by September, if they stay steady, remember they're very volatile, but if they were to stay steady, then we would be doing over 115 million in revenue and making free cash flow of 50 million, cash flow of 65 million. Big numbers. At the end of December, on that pro forma, because Bitcoin was over 15,000 and Ethereum was 1,200 at that time period, we were going to do 300 million in revenue and make 200. So stock is correct basically with the currency itself, but our margins, because our energy costs are so cheap and we're front-end loaded on the CapEx for the technology, the chips, we're in great shape. We're profitable.
And also, Frank, in a couple of years, if you guys do what you say and execute on this business plan and the numbers work out similar to what you say, it sounds like you're going to have a dividend-paying company potentially in a couple of years.
That's our goal. That'd be a great idea. And the other thing is that GMP is the first brokerage firm, biggest independent in Canada, first to put up a whole department of research analysts and corporate finance in Canada in blockchain technology. Their analysts came recently. We were all in Iceland, and they re-rated the stock. And they're calling over $3 target on it based on our numbers now. And so I think it's probably, it's reasonable. It's very reasonable because our growth rates are so great and our returns on capital are so great. Even though it's volatile, you take a discount for that, we should trade at least 10 times free cash flow. And what is that? What is that worth? In U.S. dollars, that's worth, at this rate, $500 million. So if you give it a rate that NVIDIA is trading at 60 times next year's earnings. So what would that, if we had half of that, you'd have a $7, $8 stock. So I think because we're the first guys in the block, we're the first guys to deliver. They've never known how to rank and rate these things on a cash flow and earnings multiple. And we're only, 6 months old?
Yeah, I mean, you guys have already... Yeah, you guys have already accomplished a lot in a short amount of time, and it sounds like I've looked through your investor presentation a couple months ago. I was impressed with the plans that you guys have with your diversification of data centers and how quickly everything is moving. There's a free in-depth research report for our listeners out there. They could go to pureblockchainwealth.com/block. And if our listeners want to follow more of your work, Frank, and also the company, how did they do so?
usfunds.com. Just go to usfunds.com, subscribe to Frank Talk on my global travels, and I talk from blockchain, cryptocurrencies to gold, and my experience in China. I was recently back from Asia and then Europe, and so they can live through me vicariously, and they can get comments. We're always succinct like game film analysis.
Yes, I've been reading your work for years. You do an excellent job. There's a reason you've won awards for your investment analysis. So thanks for putting the education out there for free, and keep up the great work.
Thank you. Cheers. Bye.
Please like this video, share it with friends and family, and don't forget to subscribe to the Wall Street from Main Street YouTube channel if you have not already done so. We're closing in on the 20,000 YouTube channel subscriber milestone despite YouTube censorship, and hopefully we'll be able to get to 30,000 or even 40,000 YouTube channel subscribers quickly if YouTube doesn't shut down the channel. If YouTube does shut down this channel, remember to also sign up for the Wall Street from Main Street email list that's on the wallstreetfrommainstreet.com website and will tell you where the videos are going to be uploaded instead of YouTube. Also, if you really like the content and you decide that you want to give a one-time donation, you can go to the wallstreetfrommainstreet.com website where there's different options for you to do so. Or you can become a Patreon contributor. Thanks for listening, and I look forward to providing you guys with some of the best information, analysis, and financial education available out there for free or paid.